This is your LMAX exchange technical update for Tuesday, June 13th, 2017. Euro dollar. So while this latest pullback in the euro could develop into something more significant, while it holds below 111.10, the pressure remains on the top side, and these corrections are minor ahead of what should be the next major upside extension towards 113.67, which is the August 2016 peak. If we do break down below 111.10, it would trigger the onset of a legitimate short-term correction that would open the door for a drop down towards the 109.50 area, from where a higher low would be sought out in favor of a bullish continuation. Ultimately, it would take a break all the way back down below a higher low that's seen in place now around the 108.40 area to negate the immediate topside pressure and suggest that the pressure is now going to be put back on the downside. Until then, the market remains firmly constructive and is expected to be very well supported on dips. Sterling dollar. So cable has seen a breakdown in recent trade back below some previous resistance at 127.75. That was significant resistance, with the market breaking above the top of a range that had defined the market for several months off the plus 30-year low from October of 2016 at 118.40. And so the breakdown now opens the door for deeper setbacks over the coming sessions. But again, the breakout that we did see in April above the 127.75 range high was significant on a medium to longer term basis and exposes an eventual move towards 135 further up. So if we do see setbacks extend, they're expected to be very well supported in the 125 area in favor of a higher low and continuation of gains back above the 2017 high around 130.50 and towards that 135 area further up. Why 125? Well, 125 is a congestion zone, and it also, after seeing the market trade between 127.75 and 130.50, a 275 point low to high move, the breakdown would project 275 points to the downside, which takes us exactly down to 125. Ultimately, only back below 123.60 would compromise the constructive outlook for cable. Dollar yen. So dollar yen remains firmly pressured on the downside, with the market closing in on a retest of the 2017 low from April, which comes in just shy of 108. At this point, any rallies are seen very well capped ahead of 112, with only a break ultimately back above 114.37 though to compromise the bearish outlook for dollar yen. Euro Swiss. Euro Swiss has stalled out recently ahead of psychological barriers at 110, and the market is now focused on potentially rolling over back to the downside towards critical medium-term support ahead of 106. At this point, it would take a break back above 110 to force a meaningful shift in the structure. Aussie dollar. So Aussie has seen a nice rally over the past few sessions, with the market pushing back above 75, but overall this is a market that's showing signs of topping out and is expected to be well capped ahead of 76 in favor of a continuation of declines back below recent support that we're seeing down around the 73.30 area and towards 71.60, the December 2016 base further down. Dollar CAD. So dollar CAD has seen some intense setbacks over the past few sessions, with the market trading lower and into the 133s, but overall this is a market that remains in a very strong uptrend and should expect it to be very well supported into dips in favor of that next meaningful higher low and bullish continuation back above the 2017 high at 137.94 and towards the 142 area further up. At this point, it would take a break all the way back down below 132.20, the low that we had seen on the 13th of April, to compromise the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has traded up significantly over the past several sessions and spacing out by 2017 lows around 68.20. But the market is now coming into some critical resistance in the 72.50 area and is expected to remain well capped below that 72.50 level on a close basis in favor of a resumption of declines back down towards and eventually below the 68.18 2017 low, exposing the 65 barrier further down. Only a close back above 72.50 would compromise this outlook. SPX 500. The S&P 500 is consolidating recent gains, fresh record highs that were seen this past Friday, Ultimately, the market remains focused on the top side, and there is room for an upside extension towards 2480 over the coming sessions. The 2480 extension comes from a move that we had seen between 2400 and 2320 earlier this year, with the breakout above 2400 off that 80-point consolidation, opening an 80-point measured move extension to 2480 further up. At this point, it would take at a minimum a break back below 2400 to take the immediate pressure off the top side. Gold. So gold has seen some setbacks over the past few sessions, but any setbacks that we've seen in gold over the past several months have been very well supported, with the market putting in a series of higher lows and higher highs, trading within what is a newly adopted uptrend and opening the door for fresh upside over the coming days and weeks towards a retest of the 2016 peak at 1375 further up. Look for this current round of setbacks to ideally be supported ahead of 1230, with only a breakback below 1215 to compromise the constructive outlook for gold.